Hello, welcome to the May 2025 video edition of the Iowa General Fund Monthly Revenue Memo. My name is Eric Richardson, Senior Fiscal Analyst for the Iowa Legislative Services Agency, the nonpartisan support agency of the Iowa Legislature. This video covers Iowa General Fund revenue for fiscal year 2025 year-to-date. Due to accounting procedures, it is not possible to provide revenue updates at the start of the month until all transactions have been processed. For May 2025, the issues were eliminated with transactions processed on June 3rd. This table shows Iowa net general fund revenue through June 3rd of 2024 and 2025. Revenue has decreased $742 million on a fiscal year basis, or minus 9.0% year to date, which includes a $729 million decrease in net insurance and other taxes due to a decrease in pass-through entity tax revenue in FY 2025. During FY 2024, the PTET was introduced retroactively to tax year 2022. The most recent revenue estimating conference estimate for total net receipt growth, excluding transfer revenue, for FY 2025 is negative 6.1%. So the year-to-date growth rate remains below what is needed to meet the latest revenue projection. By breaking overall net revenue into gross receipts and refunds, the current situation does look more positive. Gross revenues through June 3rd are down 7.3%, but the decrease in net revenue comes in at a minus 9.0% due to a 0.7% increase in tax refunds issued during the fiscal year, including a 477.6% increase in PTET refunds issued during FY 2025. However, school infrastructure transfers have lagged sales tax revenue for the entire fiscal year. While gross deposits of sales and use tax have increased 0.9% through June 3rd, sales tax transfers out of the general fund to the school infrastructure fund have decreased 0.7%. This chart shows fiscal year 2025 year-to-date net revenue growth as we calculate it for these monthly video memos. Growth through June 3rd is $13 million lower than the growth calculated through May 2nd. Since May 2nd, there has been a $73 million decrease in individual income tax, while individual income tax refunds have also decreased $124 million, creating net positive revenue growth for individual income tax during this period. Meanwhile, sales and use tax revenue has increased by $29 million, and PTET revenue has decreased by $112 million since May 2nd compared to FY 2024. This chart shows the combined total of tax year 2024 income tax net payments as returns were filed and processed this spring. Since for most tax years, tax refunds issued exceed the amount of payments made by taxpayers who owe additional tax when a return is filed, the net impact of the filing of tax returns is traditionally negative. This chart shows the last 10 years of the combination of payments with income tax returns and tax refunds issued. This year, FY 2025 is shown as a black line, while last year, FY 2024 is shown as a green line. FY 2023 is shown as a dark red line, while FY 2022 is shown in light blue. The remaining years shown in gray are FY 2016 through FY 2021. This graph highlights two things. First, FY 2022 tax returns were historically good for state tax revenue. And second, although FY 2025 looks poor by comparison, the year is actually fairly positive when compared to other recent years. Part of this may be due to pass-through entity tax reallocations from other taxes as PTET returns are processed. The combination of payments with tax returns and tax refunds since early February account for only $20 million of the $742 million net general fund revenue decrease for the fiscal year. Income tax rates for tax year 2025 decreased to a flat tax of 3.8% beginning January 1st, 2025. This tax rate reduction can be analyzed through the combination of withholding tax deposits and individual income tax quarterly estimate payments. This chart shows the moving total of that combination for the past 10 years, starting in early February and moving through June 3rd. FY 2022 is shown as the highest light blue line, while FY 2023 is shown in red. FY 2024 is shown in green, and the current year FY 2025 is shown in black. Tax payments associated with the current tax year since early February account for $264 million of the $742 million reduction in net revenue for the fiscal year. In summary, net revenue on a fiscal year basis and excluding transfer revenue through June 3rd is down 9%, and that rate of growth remains below the Revenue Estimating Conference projection for the entire fiscal year. A major driver of the revenue decrease is the decrease in PTAT revenue and income tax withholding payments. Meanwhile, compared to prior tax years, tax year 2024 returns appear above normal. Recent income tax reductions are taking hold in the general fund revenue stream, and this situation will continue through the end of this fiscal year and into FY 2026. Goodbye, thank you, and please check out the next monthly video memo in early July.